and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, October 26th, 2022. And our top story today, applying the lessons from 2008 to helping Americans save for retirement. Joining me now to discuss this and a lot more, Mike Tay is the president for Mutual Funds and Retirement Solutions. We're going to spend some time in our second segment talking about some retirement trends and what the future of retirement looks like. But I love to understand individuals' backgrounds, and you lead an important division within Broadridge. So wondering if you might share a little bit about your experience and background before we transition to retirement trends.
Of course. And first off, thank you for having me here again today. And this is clearly an important topic for Broadridge, but also obviously for the industry and also for the country. And as you mentioned, I'm president of the Mutual Fund and Retirement Solutions here at Broadridge. And just quickly, for those that may not know who Broadridge is, we are a global fintech leader. We deliver technology-driven solutions that drive business transformation for banks, for broker-dealers, asset and wealth managers, among others. And we've been doing this for about 6 decades now. So we've been through a lot and seen it all. And personally, I've been in the financial services space for about 25 years, having spent time in consulting, banking, and even academia, which really gave me an opportunity to understand and lead within the industry from several different facets. I also spent time working for the government during the financial crisis in 2009, when I worked for the U.S. Department of Treasury at the Troubled Asset Relief Program. It's also known as TARP, serving as Director of Investments.
Yeah, a really broad background, a really important background. And if you might permit me, I want to ask a little bit about your experience at the Treasury. I know that you had the opportunity during the financial crisis in 2008 to work on the TARP program. Would you mind sharing a little bit of the insight that what that program was, how it came to be, and how it has shaped your experience?
So working at the Department of Treasury was particularly meaningful to me because it really provided an opportunity to serve our country when our economy and financial markets were going through a particularly volatile time. And for me personally, as someone who grew up in an immigrant family, and I benefited from sort of this idea of the American dream where you go work hard and progress upwards. And so I wanted to use my financial services skills and know-how to work, not only for the government, but also to see the benefits that it would have on everyday Americans. So if you recall, the TARP program, it was created to provide investments to the banking system and financial institutions such as Bank of America, JP Morgan, Citi, and others. And the fact of the matter is that those investments really worked. And the thing that I'm most proud of as being part of a team, and this was, both with Hank Paulson and then Tim Geithner's team, so this is really cutting across multiple administrations, is that the team really implemented policies and worked directly with financial institutions to not only help stave off an economic disaster, but also it did so by prudently using taxpayer dollars. We took the TARP program and really paid the American people back, right? And with interest. And so we really accomplished multiple things, which is, on the one hand, helping sort of save the economy, and the other hand, doing so really prudently. And so for me personally, it was really a formative period in my career. And it really drove home this importance of retirement in this country. And one of the things now bringing back to today, which is like, when I think about the role that I play, and what really gets me excited is the ability to work for an organization like Broadridge that makes a difference in the retirement space. And, I talked about my immigrant upbringing, but growing up, my parents and our family, we didn't really have financial security. So, there were times when we could barely make ends meet, and not to mention, being able to save for the future. So, being at Broadridge, being able to provide technology solutions for financial services firms, which really enable Americans more broadly to save for retirement, that's personally meaningful for me.
Yeah.
And part of what I do enables better financial lives for many families like the one that I grew up in. So combining my personal background with what I did in the government, it all definitely shapes my perspective on retirement and how I come to work every day.
Yeah, and Mike, I was going to ask you to go into a little bit more detail before we go to a commercial break, which we'll do in a few minutes. I want to ask you about how this is all, you've got your personal experience, obviously very important to you, to your family, but also this TARP experience. How does that really, all the things that we're going through now with inflation, the stock market being up and down, there's a lot of volatility. People in general are concerned. How does all this shape your retirement lens?
Yeah, absolutely. I mean, there are really many dynamics that are playing out right now in the workforce. And I do think that the biggest problem is the condition of the U.S. retirement system. And, I don't know, on your program, you probably talk about this quite a bit, but, there is a pretty wide retirement shortfall of about, estimates have it about $4 trillion. And so the market volatility that we've seen over the past several months has certainly put extra focus and pressure on this gap. But it's really a trend that's been creating challenges over time. And so, when I think about, sort of the big trends here, the first one really is something that's talked about quite a bit, which is just, Social Security, because that's really one element of this, which is really the potential of the inability for Social Security to pay for retirement benefits. The GAO, they forecast something like 2.9 trillion, the $2.9 trillion Social Security fund. It's going to be depleted sometime in 2034. And so really, if there really isn't any sort of mitigating factors to alleviate those pressures, I think this is going to be a problem in the not so distant future. That's kind of one thing. The second thing is demographic, right? We're seeing an aging population, improved life expectancy, and that is really just putting some more pressure on individuals to save more money. And certainly coming out of the COVID pandemic, it's certainly impacted this as well. There's a PwC survey which found that 56% of baby boomers, they really believe that they would have to continue to work after retirement. And I think that's just another proof point and evidence that, there are real pressures that retirees are facing. And then lastly, I think really the key challenge related to this big retirement shortfall is just a lack of access to employer-sponsored funds, defined contribution plans. That is really the majority of how individuals accumulate retirement wealth. But only 64% of private sector employees really have access to a plan and are just not fully invested. So, you have 656,000 defined contribution plans, but you have 4 million entities that have no plan. And that's just a real gap, right? And with pension plans, they're really no longer as prevalent as in the past. And so, individuals really just need to think about security and particularly financial security when it comes to their future. And so, Secure Act 2.0, think that legislation, and there's key components of that, which we really should be on the lookout for. And I do think that there are elements of that will help address this gap.
Yeah. Well, Mike, I need to take a very quick break. When we come back, we'll talk about the future of retirement. We'll build upon some of those trends Mike discussed. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're joined this morning by Mike Tay of Broadridge. Well, Mike, thanks so much for staying with us. Really appreciate you stopping by the program, given your incredibly busy schedule.
Thanks, Jeff.
All right, you talked about some really important trends and how you're kind of looking through the lens that you have working for government, but also working in financial services. And I want to take a step back because I think we learned a lot during the COVID pandemic about the importance of technology. Here we are connected via Zoom. People are doing transactions using their devices. They're checking, looking up information. Mike, how important is in the future financial system is a technological infrastructure? We know we hear the word fintech. A lot of people know that as financial and technology, but we really need a strong infrastructure to support banking, the markets, etc.
Absolutely, Jeff. I think the first thing I'd say is that, as a result of the pandemic, one of the things that we did see was an acceleration of certain trends. And an example of that is everything that is what you just described, right? We're doing this call over Zoom, but there are a lot of folks that are now doing more online banking, more online transactions, and the way in which consumers and retail investors and retirees are engaging with financial products has just changed, and that's dramatically changed. So to your point, the underlying infrastructure that's required to support that obviously needs to change as well, and really needs to conform to meet the demands of many of the innovations that have occurred, particularly from a retail demand perspective. And so, at Broadridge, I could talk about how we really sit at the intersection of financial services providers. And the focus really is around providing education and solutions for this growing space in the market. And, we have one business, for example, we really help our clients solve for new lifetime income disclosure rules on their participant statements. And that's something, again, when you think about sort of disclosures in general, it's a really critical part of how people engage with their investments is making sure that they get the right information, right? And so trying to figure that out in a digital manner with new demands coming out of COVID is something that's something that we think about quite a bit. Another element is sort of the mission. We have this solution called FI 360, and it's really a fiduciary focused advisor business. And what we've done is we've launched this retirement income consortium, which is really in conjunction with 10 of the leading asset managers and insurance providers, along with some well-respected industry experts and consultants, is really to provide education to the advisor community and develop due diligence methodology. They'll be launching later this year to really help advisors prudently select the right investments for their plans. But again, that's something, when you think about the changes that have happened, retirement as a whole, I talked about this gap, but there's a lot of focus on it. So, how do we think about not only from an infrastructure perspective, but from an industry perspective, how do we come together and come up with industry solutions to really address some of these gaps. And then, for our matrix solutions, I know you had Cindy Dash, on previously, but we really, that business focuses on sort of trust and custody trading solutions for the retirement industry. And again, working to provide solutions to really support, new retirement income products to, record keeper and plan sponsor customers, along with the ability to offer lower cost small plan options to our record keeper clients. And so really, when you bring it all together with all these changes, there are real opportunities for service providers to expand their reach. Broadridge is a part of that. There's a lot of entities out there that are a part of that are really thinking about new and enhanced capabilities for the end client. And ultimately, when you think about if you're a provider in the system, does that provider, does it have capacity? Does it have flexibility? Breadth of expertise to really provide an edge in integrating new types of products? Particularly, with confident fiduciary controls that plan sponsors and participants, will be able to understand and take advantage of for greater retirement savings options. So, that's generally like all these things are really critical to think about, when we think about sort of these new requirements and, ensuring that the underlying technology has sort of the right infrastructure. And then the last thing I'll say about that is just really around, ultimately I think about, what can we do? What can we all do to help America save more, right? And I think when we think about, if you have that mindset, I think we will all succeed.
Yeah, and just to pick up on that, and I want to kind of circle back, a lot of people don't think the retirement and financial services industry is dynamic, but it really is. It has changed substantially in the last 3 years because of COVID, and it continues to evolve. And Mike, you mentioned the Secure Act, Secure 2.0, which is kind of like the next iteration of retirement legislation. But there's really a need for service providers, and you mentioned some of them: the record keepers, the asset managers, the custodian that holds the assets, and of course the financial advisor, the investment advisor. They've got to stay on their toes. I almost think of them as like a Brooks Robinson, like a third baseman playing that hot corner. They've got to stay on their toes in order to comply with all these new changes and rules and regs that come from SEC, Department of Labor, and other parts of the U.S. government.
Absolutely. And I think there's actually a tremendous opportunity for providers just generally to evolve and help businesses. I think especially small businesses, and really take advantage of some of these new retirement options. And, you talk about legislation, there's Secure Act 1.0. That was a start, right? It enabled providers to make necessary changes, to plan design to make it easier for more Americans to participate. But, I've definitely been, pretty close to 2.0 and sort of what's happening there. And, at the end of the day, we really need to think about what does that final legislation, what does it end up being? But, really the intent, and I think this, but, the intent of the legislation is really just to, increase the formation of new plans. We want to increase, participant enrollment, get people to save more for retirement in alignment with what the typical American worker really needs. And so I think there's definitely a lot of changes that are happening, down the pike. And, it requires flexibility. It requires the right technology solutions to really scale and really address those. So you're absolutely spot on.
Yeah. And the last question I have for you, Mike, and you have talked about this throughout our conversation. It's about education, and you and the folks at Broadridge are doing a lot of educating, coming on this program, educating our audience, but also plan advisors. You mentioned the FI 360 platform, asset managers and record keepers about the latest things that are happening, but also the participant. The participant needs education because there's a lot of decisions that they need to make and learn about. I would say that's a pretty important part of your value prop.
Yeah, absolutely. And I just want to tag on a couple more things, because you're absolutely right. That is a really big part of what we're doing and what we're thinking about. As an example, right? Like there's some specifics that are coming out of 2.0 that we've been tracking that I think as part of our education mission, but also helping some of our clients really think about, there's whether or not, the act really, increases availability of retirement plans, by incenting employers, definitely small businesses to offer plans through new and enhanced tax credits, right? There's increasing participation in retirement plans by expanding auto enrollment, right? And increasing eligibility for part-time workers, student loan repayments to be eligible for matching employer contributions, which, as we all know, it's a pretty key part of enhanced financial wellness. The third thing is around just, increasing flexibility of retirement plan savings through increased catch-up contribution limits, increasing the age of required minimum distributions. So there's a ton of things that are happening, and really, what we're trying to do is make sure that we're on top of the regs. To your point, that we're educating all the members and all the folks in the ecosystem in the retirement space, and being ready for those changes and figuring out what we can do to solve these problems for retirees as well as financial providers.
Yeah, well, certainly people are looking for answers. Mike, it's great to talk to you as always. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Thanks so much, Jeff. I appreciate it.
That wraps up this episode of BRN AM. Have a topic of interest, somebody you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, visit our website and, of course, our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.